It's a nice cloudy day today. Remember, find a nice quiet place and put on your headphones and enjoy the lesson. And thanks again for purchasing this video. You're definitely going to be better off after it. And in today's lesson, I'm going to be looking at the general journal, which records those transactions that don't fit in to any other journal. So we're going to be looking at the general journal. This journal is a little bit different to the others, and I will point out the differences as we move along. Enjoy the lesson. Never forget the bigger picture. Here we got the accounting or bookkeeping cycle, and we're doing the books of Calibre Education, and we're going to be looking at transactions. Remember, transactions that are recorded in the general journal. We're going to have a look at what document is drawn up to enter the transactions in the general journal. We're going to be looking at the general journal, and then we're going to take the information and we're going to put it into the general ledger. That's what we're going to do today. Here are some examples of the transactions that we're going to cover. Remember, these are transactions that don't fit into our normal journals, the journals that we have dealt with already. So say, for example, Richard, the owner, made a capital contribution of a delivery vehicle. So I'm not contributing cash there. Remember when we did a capital contribution of cash, it went into the cash book receipts. In this case here, Richard, myself, the owner of Calibre Education, has made a capital contribution of a vehicle. We're going to look at that transaction. There's interest on the loan, and we need to record the interest on the loan. Richard took a tablet, so I'm taking stock for personal use. We'll have a look at that. Now all these transactions are recorded on a document. And here my wife, Ruska, has drawn up a journal voucher to record this interest that has been charged to the school on an overdue account. So a journal voucher is used to record transactions that go into the general journal. The journal voucher is the source document that is used to record transactions in the general journal. So a journal voucher is drawn up for all the transactions that go into the general journal. From the voucher, the information is posted to the general journal, and the information is then taken from the general journal to the general ledger, and so the cycle continues. Don't worry, the journal and the ledger is a bit small, but as we continue in the video, we will deal with all the transactions that go into the general journal, and we will post information to the general ledger. These are the transactions for the month of February of Calibre Education. If you've seen my previous videos on the other journals, you would have seen these transactions already. But today, I'm concentrating on the transactions that are going into the general journal. So the green highlights those transactions that are going into the general journal. We're going to look at all these transactions. On the first, that capital contribution of a delivery vehicle. On the third, the interest on the loan. We will look at that. On the 13th, taking the tablet from stock. On the 14th, the school paid us and we gave them settlement discount. On the 17th, made an electronic payment to the computer store and we got settlement discount. So we're going to look at a few discounts here. Discount received and discount allowed, and the other transactions. Also, on the 21st, the school, a private school, went into liquidation. Now we have to write off a certain amount that the school owed us. We will look at that transaction. On the 26th, there's a correction of error that needs to go through the general journal. So there are quite a few transactions in this lesson that we will look at. Then these are transactions that also took place on the last day or the second last day of February, because February 2024 is a leap year and it has 29 days. So those are the transactions of Calibu Education for February. We're going to record those transactions that need to go into the general journal. There's a beautiful sky tonight, some sun shining through there. The document that we are going to use to record these transactions, I did mention earlier, there's Caleb doing some hard work, and I'm sure you people are doing hard work as well. This is the document. It is known as the journal voucher. So the journal voucher will record the transaction, and from the document the information is recorded in the general journal. So this document here, it's saying that the school has been charged interest on their overdue account, a customer of ours, and they haven't paid in time. The amount is 500. Marushka has authorized this transaction to take place, and there's her signature there, and it also tells you which accounts are going to be charged, which accounts are going to be debited and credited. So that's what this journal voucher will record. Any transaction that doesn't go in the other journals will go into the general journal. Now, in front of you, in front of the nice blue sky, you have a general journal, the layout of the general journal we're going to do. There's a column for document, the document number, the day the transaction took place. Now I want to point this out carefully. There's a column here for details, and in the details column will be the accounts that are debited and credited. I will go into it in more detail as we move on in this video, but this column here for details is the column which records the general ledger accounts which are debited and credited. And at the end of a transaction, there's something called a journal narration, a journal story about the transaction. For example, here, Richard contributed a vehicle. It tells you more about the transaction. So this details column here, I'll say it again, records the accounts that are debited and credited in the general ledger. And at the end of the transaction, there's a journal narration, a story. Then there's a column for folio, We'll put in these folios here a little bit later when we've done the general ledger. Then there's a column for the account that was debited, the amount, and the account that was credited, the amounts. So there's a column debit and credit for the amounts. Also, what I will mention as we go on is this journal could have actually had a few more columns called a 6-columnar journal for another debit and a credit and another debit and a credit for the debtors control and the creditors control account. But in this exercise, I'm going to use one debit and one credit column. And we're going to go through all these transactions. So what I've just explained here is the layout of the general journal and what column is for what. So there we got the document numbers. Remember I showed you the document, a journal voucher. As I mentioned, that's just popped up there. We can have an extra column for debtors control and creditors control. So some lecturers or textbooks might have this extra column. I'm going to be working just with one debit and one credit column. So there you go. Let's move on.
Daddy, you made a mistake.
Thanks, boy. I have made a mistake. You're right. Did you guys spot it? That there, that amount. Output VAT should have been in the credit column because output VAT is a liability and there's an increase in liability and the rule says it should be credited. Thanks, boy, for pointing out that mistake. Much appreciated. Transaction number 1. We have Richard contributing a vehicle. The vehicle is 100,000, the value, and the revenue services has allowed VAT to be claimed on this transaction. So in the general journal, we'll start off with the document number, journal voucher 10. This transaction took place on the 1st. Now under details, remember, we're going to put in there the names of the accounts that were debited and credited. Now vehicles is an asset, so we debit vehicles. The business can claim input VAT, it's an asset. So both the value of the vehicles and input VAT, the value of the asset has increased, and the rule says an increase in assets, debit this account. And an increase in capital, we credit the account. The folios of these ledger accounts we will look at when we've completed the general ledger, because the folios come from the general ledger or the previous month's trial balance. But vehicles and input VAT are B accounts, statement of financial position accounts, as well as capital. The amount for vehicles is 100,000 less the VAT amount. Remember, in order to get the VAT amount, because all amounts are inclusive of VAT, we say 100,000 multiplied by 15 over 115. If you've watched my video on VAT, that is the VAT fraction. We take the inclusive amount of 100,000, we multiply by 15 over 115, because VAT is 15%, that's where that 15 comes from. If it was 10%, it would be 10 over 110. And when we do that, we get 13,043. and 48 cents. That is the VAT amount. Then the actual cost price of the vehicle is 100,000 minus the 13,043 and 48. So let me rub that all out, and we will look at a nice neat copy. This rubber doesn't seem to be working too well today. Not sure why. But there's the transaction recorded in the general journal. Now, the next step is to take the information from the general journal and we take the information to the general ledger. And there's the general ledger. And don't forget, the left hand side is the debit side and the right hand side is the credit side. Now capital was credited, vehicles was debited, and I'll show you why. What happens here is I applied my accounting rules. You need to watch that video on accounting rules. Capital is its own category. In this case here, there was an increase in capital, so the account needs to be credited. And there we go. On the credit side of capital, we should have the date here. Under details, the name of the contra accounts, vehicles and input VAT. Where did the information come from? The general journal. And what was the amount for capital? There it is, 100,000. Under details, we've got the other two accounts. We've got input VAT and vehicles. So under details, we got the names of the contra accounts, the other accounts. Then vehicles, the vehicles account was debited, and the reason being the account, the vehicles account, or the value of the business's vehicles increased. So plus under A, the account according to the rules must be debited. So vehicles gets debited with the amount excluding VAT, and the contra account is capital. When did this transaction take place? On the 1st. So now we've done the vehicles account and capital. We still need to do input VAT, and there we go, there's input VAT. Input VAT was debited because there's another increase in assets, and the amount, I showed you how to calculate the amount, and the contra account is capital. So from this transaction, we recorded the information in the journal. From the journal, we posted the information to the ledger accounts. So there's transaction number 1 done. Richard made a capital contribution of a delivery vehicle, 100,000. We were allowed to claim input VAT. Let's move on to the next transaction. Oh, hello, that's me, in case you never knew. Just before we move on, I just want to show you the credit was 100,000, and if you add 86,956 plus the 10,043, that will equal 100,000. So our debits equal our credits. Even though there are only 3 accounts involved here, our debits equal our credits. And what makes up that 100,000? Vehicles and input VAT. The two amounts in the vehicles and input VAT accounts equal 100,000. Okay, now we're ready to move on. In this transaction, there was information that needed to go into the cash book payments. Let's have a look what that was. It says here, I'll read the whole transaction. On the 3rd, interest on the loan amount, it amounted to 1,500. So we've got a loan with the bank, and the bank charges us interest, the cost of borrowing money, 1,500. The first installment, got to pay back the loan on the loan, was also paid according to the bank statement. That amount was 2,000 Rand. So when we drew up this, when we entered into this contract with the bank to lend money from the bank, we agreed to pay back 2,000 Rand per month. So the 2,000 Rand came straight out of our bank account. That information was recorded in the cash book payments. So at this stage, our dealing with the bank is over. We recorded that in the cash book payments. But we still have to record the information relating to the interest. We have not paid the interest yet, but we owe the interest of 1,500. So this transaction here, the 1,500, needs to be recorded in the general journal. So we have a journal voucher number. We picked up the information from the bank statement. It took place on the 3rd. The interest on the loan is 1,500. Now, interest on loan, I'll show you in a moment, is an expense. There's an increase in the expense, so the account gets debited. The loan, which is a liability, has increased. An increase in liability, the account gets credited. Something I haven't mentioned yet is in this details column, the account that is credited. Before you write the name of the account, there's a little indentation there. It's just showing that the account is credited. The debit account, the account that is debited, gets written up against the line. So if you see in your textbook, there's an indentation next to the account that is credited. I think that was implemented or started just to make it easier on the eye. So the account that is credited, before you write the name of the account, there's a little space, an indentation, showing that that account is credited. So the next step is we need to take this information from the journal and we need to put it into the ledger. Remember the debit and the credit side. Debit side is the left-hand side. Credit is the right-hand side. Now the loan with the bank was credited. And we know that a loan is a liability. The liability has increased, and the rule says the account must get credited. So on the credit side of the loan account, you must write the institution with whom we have the loan, and we have the loan with the bank. The amount is 1,500. Where did we get this information from? The general journal. The name of the contra account is interest on loan. The date we're recording this transaction was on the 3rd. So loan was credited. increase in liabilities. The account that is debited is the interest on loan account, which is an expense. An increase in expense, the account must get debited, go on the left hand side. So there's the entry. The name of the contra account is loan, the bank. We got the information from the general journal and the amount is 1,500. Nice easy transaction when you know how to do it. I'm going to take my time on this transaction because the calculations can be difficult if you don't understand exactly where you are. So let's have a look here. On the 13th, Richard took a tablet from stock for Caleb to use. Now the selling price including VAT is 3,200, and I'm going to do the transaction like this. If the owner of a business takes stock for his own use, he takes the stock at cost price. That means excluding VAT, right? So the first number I'm going to calculate is the trading inventory amount of the tablet that Richard is taking at its historical cost price. And in order to do that, I say 3,200, which is the number that is given to us. It's the selling price including VAT. To take off the VAT, I divide by 1 plus the 15%, which is the VAT rate, and as a decimal, that is 0.15. So to take off the VAT, I say 3,200 divide by 1.15. Now in this whole exercise, the markup on the cost price is 40%. So to get to the cost price of the stock that is being taken, I need to take off the markup of 40%. And I can do that by saying divide by 1 plus the 40%, which is 1,40. So 3,200 is the amount that includes output VAT, and it includes the markup, because I want to get back to the historical cost price of the trading inventory that the owner is withdrawing for his own personal use. So I said 3,200, take off the VAT, divide by 1,15, take off the markup on the cost price of 40%, so I divide by 1,4, and that gives me 1,987 and 58. You can go punch that into your calculator and check. Now let's continue. When we bought stock from the computer store in the first place, we were going to use the stock for normal business. So the stock was a standard rated item where I could claim input VAT. Now the stock is not going to be used for resale. The owner is taking the tablet for his son's use. I cannot claim input VAT on an item that is not being used for the business. So the input VAT that was originally claimed when the stock was purchased needs to be reversed. So we're going to go, and this is wrong here, we're going to credit output VAT with 298 and 14 cents. Now, how did I get that amount? I said 1987 and 58, 1987 and 58. I just calculated that above, multiplied by 15% will give you the amount of the input VAT that we originally claimed that needs to be reversed by crediting output VAT. And the amount, that 1987.58 times by 15% is equal to the amount 298. I'm just going to say that again because this pen is not working too well. But let's try it again. So 1987.58 times by 15% will give us 298 and 14 cents. That is the VAT amount that needs to be reversed, because remember we claimed input VAT when we bought the stock in the first place. We are not selling the stock to the public. We cannot claim input VAT, so we reverse it by crediting output VAT. And then the drawings amount is the total amount. So I say 1987.58 plus the 298 gives me the drawings amount of 2285.72. So that is how we calculate the amounts in this transaction. So I've calculated the amounts. Let's move on. So output VAT was credited, and the reason is output VAT is a liability. The liability increased. The rule says the account must get credited. The contra account is drawings, and where did we get the information? From the general journal. And I showed you how to calculate the 298 and 14 cents. Trading inventory, the tablet has left the building and now is in the hands of Caleb, and that is the historical cost price excluding VAT of the stock that was withdrawn from Calibu Education. The contra account is drawings. Where did we get the information from? The general journal. And why was trading inventory credited? Because the value of our stock on hand, remember we're looking at things from the point of view of Calibu Education, the value of the stock has decreased, so the account trading inventory gets credited. It's on the right hand side, the entry. And then what was the value of the drawings? The value of the drawings includes the output VAT amount. It's 2285 and 72 cents. And they're the contra accounts. So the total amount is in drawings, and that 2285 is made up of output VAT and trading inventory. So this one was a little bit tough, so watch it a couple of times, calculating the amounts and understanding why output VAT was credited. Output VAT was credited because we needed to cancel the original input VAT that was claimed on this tablet that we were going to sell. But now that it was withdrawn by the owner, it is not going to be sold. So we needed to reverse the input VAT that was debited by crediting output VAT, which is an increase in liability. Let's move on to the next transaction. On the 14th, we have a transaction that needs to go into the general journal. The school, a debtor of ours, that means we sold to them on credit, they paid us, but we gave them a 3% prompt settlement discount. Now the question is, what is the amount? Now what I have here is I've taken just an extract of all the transactions that related to the school. We don't need to know all of them, but what would happen is all this information here would be posted to the debtors ledger, the account of the school in the debtors ledger. Then I would check on the 14th what is owed to, or what the school owes us, and the discount is 3%. So calculate 3% of the amount that is owed, and that is how we get the amount. That isn't for this lesson, because I take it you can all calculate 3% of an amount, and the 3% of an amount, let me rub this out quickly. I'll show you what it came to. So we need to go to the school's account in the debtors ledger. We check what the amount was on the 14th, and 3% of the amount owed by the school is 882 cents. So I'm going to record this discount aloud now for the debtor, and what will happen is you will see there it is, 3% discount granted. The amount was 3% of what was owing by the school on the 14th, and that came to 882 cents. Now when we made a sale, we collect 15% VAT on behalf of the revenue services. But what has happened with us allowing this discount is 3% of the amount owed by the school is no longer a sale because we allowed discount. So we went and accounted for output VAT 3% more than what we should have, because we now have given a discount. So what we need to do is we need to reverse that output VAT. So we go and debit input VAT, and the amount is 882 cents. That is the inclusive amount. So if I want the VAT amount, I can multiply that 882 cents by our famous VAT fraction. So multiply by 15 over 115, and it will give us the VAT amount, 104.45. Now remember, the original VAT that was recorded was output VAT. We need to reverse that because the sale has got smaller by the settlement discount granted. So we go and debit input VAT, 104.45, and Sales, which records the exclusive amounts of VAT, is 882 minus 104.45 gives us 696 and 37. So that is how the amounts are calculated. And now it's a lot easier now that the amounts have been calculated. So we're doing this transaction which relates to our customer, the school. The school has an account with us. It's accounts receivable, a debtor, and the school pays us, and we give them 3% settlement discount. And I showed you we get the amount from the debtor's account in the debtor's ledger. Let's just clean up here, and we can see which accounts are involved and why they debited and why they credited. So sales was debited. Some textbooks might have an account called discount allowed. Input VAT was debited, and debtors control, they owe us 3% less, credited. So let's have a look at the reasons why the accounts were debited and credited. So sales, I'm going to see it like this. Sales is income. The income decreased because of the discount, and it decreased by the amount excluding VAT. The contra account was debtors control. If there was only one debtor, it would be the school. But remember, the control account is a summary of all the individual debtors. I'm not going to treat this as an expense. If you had discount allowed, some textbooks might open up an account called discount allowed. What I'm doing here is I'm straight away debiting sales, which makes the sale smaller by 3%, the discount that was given. So sales is debited, decrease in income. The rule says decrease in income, debit the account. Input VAT is an asset. The input VAT has increased because we reversed the output VAT. Increase in assets, the account must be debited. The contra account of input VAT here in this case is sales, and debtors control is credited because the value of what the school owes us has decreased by the full amount including VAT. That's why in details we have the accounts that were debited, sales and input VAT. Let me clean this up. Nice, my rubber is working well again. Technology I just do not understand at times. Accounting is my thing, fortunately for you. So the full amount, debtors control, was credited, and the 69637 plus the 104 is equal to 882. So my debits equal my credits. So there we go. There's settlement discount that was given to the school, and there are the accounts that were affected by this transaction, and we've dealt with them. This is discount allowed. In this case here, sales was debited directly, and then we debited input VAT and credited debtors control. We always apply our rules. So you need to be able to categorize every general ledger account. I keep saying it. You need to know your accounting rules. I have a great video on accounting rules. Check it out. In this transaction, we are going to receive discount by settling our account with the computer store. Remember, the computer store is our supplier of stock, and a transaction will take place. Remember, this is similar to the debtor that I just showed you. I've extracted all the transactions that apply to the computer store. We are going to receive discount from the computer store. You will see it will be a percentage again. So this here is the account of the computer store in the creditors ledger. Okay, it is quite small, but we don't need all this information for this lesson. But we are going to settle an amount owed to the computer store, and we're going to receive discount. You are able, I'm assuming, to calculate 5% of the amount owed. That's the discount we're going to receive. And this is a picture I've just received from Mommy and Caleb. They're at the beach while we're doing a little bit of work. They're getting pleasure, and we are growing in knowledge. So this is the transaction. On the 17th, made an electronic payment to the computer store. We received a 5% settlement discount, and a journal voucher was used to record the discount. We take 5% of the amount owing on the 17th from the creditors ledger in the account of the computer store. So that's how we calculated this amount. We took 5% of the amount outstanding. We debited creditors control because we owe the computer store less. It's a decrease in liability. More on that in a moment. When we bought stock from the computer store, we could claim input VAT, but now the amount that we owe the creditor has actually got smaller. So we need to reverse the input VAT by crediting output VAT. And also our stock here is worth less. We didn't pay as much for the stock because we received a discount. So we're going to credit trading inventory decrease in assets. So let's check how to deal with that. Once we've done the journal, we post to the ledger accounts. So we're going to debit creditors control, credit output VAT, and credit trading inventory because we received a 5% settlement discount. So these are the ledger accounts that you've just seen that are affected by this transaction. We got creditors control, output VAT, and trading inventory. Now, why was creditors control debited? Creditors control is a liability, and so is output VAT. But creditors control, because we received a discount for settling early, what we owe the creditor, the computer store, has decreased. And a decrease in liability, the account must be debited. So there's the date. Under details, it's the name of the contra accounts. Where did we get the information? from the general journal, and it's the full amount, including the VAT that we've reversed, and the account is debited, decrease in liabilities. Now, output VAT is an increase in liability because we're cancelling out the input VAT that we claimed on the original purchase. Because we're getting a settlement discount, the purchase, what we owe the creditor, has decreased. We can't claim the full input VAT amount that we had originally. We need to take off 5%. And the way to reverse the input VAT by 5% is we credit output VAT with the 5% multiplied by 15 over 115. Let me show you quickly how to get that 411.20. Remember, this amount here, the 5% discount that we are receiving, is the full amount including VAT. To get the VAT amount, we need to multiply by the VAT fraction, 15 over 115, and that will give us 411.20 cents. Then the amount of the trading inventory, because remember that's recorded excluding VAT, we say 3152.50 cents, the inclusive amount, minus the VAT amount, and that gives us the trading inventory excluding VAT. So there you see how we got that 411.20 cents. So output VAT gets credited to reverse the input VAT by the settlement discount amount multiplied by 15 over 115. Trading inventory. Trading inventory is an asset. The cost of the trading inventory has actually decreased because we got a settlement discount. And there's the amount it decreased by. You just say the inclusive amount, 3152.50 cents, minus the VAT amount of 411.20 is equal to a decrease in the value of the stock that we have on hand and a decrease in assets. The account must be credited. So the entry must be on the right hand side of trading inventory. So these general journal transactions can be quite tricky because you need to understand what happened in the first place. And if you want the information that took place prior to this discount that was allowed or discount that was received, you need to go check what happened in the debtors journal and the creditors journal in order to understand actually how to do this transaction and why output VAT is credited. It's to cancel the input VAT that was on the original transaction where we made a credit purchase, because the amount that is owed to the computer store and what we paid for stock is actually less after this settlement discount has been received. It's a toughish one to understand, but the more you think about something, the more things are going to fall into place. So think about what I've said very carefully. Go through the original transaction, the original credit purchase. It'll help you understand this discount transaction. On the 21st, we got the bad news that the school, our customer, private school, was going into liquidation, and we received 60 cents in the rand of what was owed to us. The balance was to be written off. So 40 cents out of every 100 cents has to be written off. Now the 60 cents in the rand that we received, we have already recorded in the cash book receipts. The bad debt, the credit loss, the amount that we are not going to receive needs to get recorded in the general journal. Now we need to calculate how much gets written off. And how we do that is, once again, we need to go to the account of the school in the debtors ledger. So what I've put up in front of us is the account of the school in the debtors ledger of Calibre Education. Now this happened on the 21st of February. So we go and have a look on the 21st. What was owed to us? Well, before the 21st, because this all took place on the 21st, and the amount you can see there is 12,785. Now we are going to receive, we received 60 cents in the rand. We are going to receive, we're going to have to write off 40 cents in the rand if we receive 60 cents in the rand. And in order to calculate that amount, 40 out of 100 multiplied by the outstanding amount of 12,785, there it is, 12,785 is going to give us, if you punch that into your calculator, it is going to give us 5,114 exactly. There it is. So that's how the amount is calculated. So now we're going to have to record this transaction. Originally, we had made sales to the school. Now, the school has gone into liquidation. 40%, 40 out of 100, 40 cents out of every rand that was owed to us is going to have to be written off, because they said they only paid us 60 cents in the rand. So I showed you, I'll show it again. We want to put in the general journal what was written off. What is the bad debt? 40 out of 100 multiplied by the amount that was owed to us when we received this bad news. That is the amount of the entry. So 5,114 is the bad debt that the school is unable to pay us, because they've gone into liquidation, which means the current assets are smaller than their current liabilities. More about that a little bit later. This bad debt or credit loss, whatever you want to record it, it's an expense to the business, and it needs to go through the general journal. So let's have a look how this is recorded in the general journal. I'm going to clean up this quickly. So if you look at the general journal while I'm busy rubbing this out, there are 3 accounts involved. When we made a sale to the school, we claimed output VAT. But now we are not going to go and pay money to the revenue services, especially if we're not going to receive a big amount that was owed to us. And in order to reverse that output VAT that we recorded on the original transactions, the original sales, we need to go and we need to debit input VAT to reverse the output VAT to the amount of the loss that we're going to incur. We checked on the school's account on the 21st, 5114 was going to be bad. We need to calculate by saying multiplied by 15 over 115 to get the VAT amount that we're going to reverse, which is 66704. And then what actually is the bad debt? It's 5114 minus the VAT amount, and the bad debt is 4446 and 96 cents. Now from the journal, the next step is to post the information to the general ledger. Don't forget, every single journal entry, general journal entry, gets a little story, a narration. It's called the journal narration. Sometimes in a test or exam, the examiner says, you don't have to put in the narration, the story. Then you only put in the accounts. So look out for that. That is called the journal narration. So credit losses was debited. I'll show you why in a moment. Input VAT was debited. Remember, the account that is credited is written a little bit away from the margin. Maybe because it's easier on the eye. Remember, I mentioned that at the beginning of the video. And the account that is credited is debtors control. Now, credit losses is an expense. Credit losses is bad debts. It's an expense to Calibu Education. So the expense due to this liquidation, this write-off, has increased. An increase in expenses, the rule says, debit the account. And under details, you got debtors control. Where did this information come from? The general journal. And what was the amount? It's the amount that was written off less the VAT. Input VAT is an asset, and so is debtors control. So what has happened here, because of this liquidation, the debtor, the school, owes us less, 511400. That is a decrease in assets, so the account is credited. The 5114 is the full amount, made up of the bad debt, 4446 and 96, and to reverse the output VAT, remember input VAT was debited, increase in assets 66704. So our debits equal our credits, and after this transaction the balance in the account of the school will be 0. And if we do further transactions with this client, it will not go into the school's account in the debtors ledger. I thought I'd just change the background a bit here. So here come some clouds. On the 26th, it was realized that the equipment account had in error been debited. the advertising account should have been debited. So what we need to do here is we need to correct an error. But it is important to understand what has happened. So I'll use T accounts here quickly. I'm going to start off with the equipment account, and that A stands for advertising. So the transaction says or reads, it was realized that the equipment had in error been debited. So equipment was debited with 300 by mistake. That was wrong. It should have been advertising. Now, in order to correct this, advertising needs to be debited with 300 and equipment needs to be credited with 300 in order to correct this error. So when you do a correction of error, they are going to test your understanding of accounting. That's why along the way, every section you need to master, especially when there's a mistake and you need to correct the error. So what I established here was what happened in the first place. Equipment was debited with 300. It should have been advertising. So to fix the error, I needed to credit equipment and debit advertising. So that is the entry. So let's have a look at what I've done in the general journal. Correction of errors done through the general journal. I'm going to clean everything up. I will do a video on correction of errors. Look out for it. But it's important to master everything else first before we do correction of errors. So advertising was debited with 300 and equipment was credited with 300. And the narration is the story, correction of error. And there we go. Advertising is an expense. The expense increased. The rule says debit the account. The contra account is the other account affected by the transaction, which was equipment. Where did we get the information? The general journal. What was the amount? 300. Why was equipment credited? Because equipment is an asset and there's a decrease in the value of equipment when this error is being corrected. And there it is on the credit side, 300. Nice easy one if you know what happened in the first place. They did not say that VAT was recorded incorrectly, so all we need to do is correct the error that has been pointed out. Now what I have and what you have in front of you is just the completed journal with all the transactions put together. Remember, there was this error that I'm crossing out now. That amount should have been in the credit column, 298.14, because output VAT is a liability. Increase in liability, the rule says credit. Caleb pointed that out for us. Just some revision. Column for document, the day the transaction took place. The column for details, or what goes under details, is the name of the general ledger accounts that are being debited and credited. Each transaction has a little story called a journal narration. Sometimes the examiner says you can leave out the narrations, and they use a word, omit narrations. Omit means leave out. So these little stories can be left out. But if you were doing your books, it gives you more detail with regard to each transaction. Folios, I will show you, we'll come and fill in a moment. There's a column for debit and a column for credit. Sometimes there can be more columns here if they put in a 6-columnar journal for debtors control and creditors control. I did mention that earlier. Let's move on. In front of the blue sky, just the end of the journal, the transactions that happen on the 17th, 21st, and 26th. Hey, and there's VAT Boy. He's popped in just to make sure that you've dealt with VAT correctly, and he has a happy face. So I think we've done things correctly. This here is a copy of the general ledger with all the transactions completed. Remember, I did the general ledger for each transaction with each transaction. Here are the folios for each ledger account. I got those folios from a previous month's trial balance. These accounts that start with a B are asset accounts, capital accounts, and liability accounts. The B stands for balance sheet, but these days it's called a statement of financial position. But this is the reference, the folio reference for these ledger accounts. And it's got a little bit cloudy. Maybe we're going to get a downpour, some nice rain. Continued, the general ledger. We've done these transactions as we looked at each one individually. Trading inventory is B6. Debtors control is B7. Once you've done the ledger in a test or exam, you can go back to the journals and fill in the folios, because the general ledger indicates the folio references or a trial balance from a previous month. Input VAT we did the loan, we did output VAT. So I'm putting the whole ledger together here instead of just after each individual transaction. It's important to try keep these transactions in date order in the general ledger. Balancing ledger accounts, I will do a lesson on that. Look out for it, how to balance general ledger accounts. And slowly but surely we're coming to the end. Some more ledger accounts. These here are N accounts, income and expense accounts. They're called nominal accounts. Creditors control was a liability. It's still a B account. The sunset. Bad debts. Credit losses is bad debts. We looked at that. Advertising is an expense. There was a correction of error. And now what I did was I went back to the journal and I filled in just some of the folios as an example. Once you've done the ledger, you can come back and fill in the folios. In the folio column, if you wondered what that folio meant, it's the reference given to these ledger accounts, the folios given to these ledger accounts in the general ledger. So vehicles was B4 in the general ledger. Interest on loan was N13. So I did the general ledger, and in order to complete this journal properly, I come back and I fill in the folios. There we go. All the folios. And now let's see. That boy's popped in again. This is the last bit of the general journal. All the transactions that took place. The general journal is not an easy journal. It's a little bit different to the other journals, but it is the last journal that we're going to do. Maybe later on we will do a salaries and wages journal, but so far we've done the cash book receipts, the cash book payments, the petty cash journal, the debtors journal, the debtors allowance journal, the creditors journal, the creditors allowance journal, and the general journal. So the general journal, it does require prior knowledge of all the other journals in order to do it correctly. It's a little bit different to the other journals because this details column here puts the accounts that are debited and credited in the details column. Then there's a column for debit and credit. And once we've done the ledger, we can fill in the folios. That brings us to the end of the general journal. Everyone is happy. I hope you guys are happy as well. Mommy looks happy. She's smiling there. We're getting some healthy food. We are getting to the sea, and there's some beautiful things in the garden. Everything is going well. I hope things are going well for you too, and you're learning all the time.